Hi everyone, it's Hannah here, and today, as most of you guys seen our Facebook, we're having a Mother's Day special, because the Mother's Day has just gone, like the Sunday 26th, and today we invite our expert again, Aidan.
Thank you.
So the topic today is about ISA. Actually, yesterday when I talked to Aidan, the ISA is very interesting. It's more than just cash. So I think, and also it can be used for for family wealth planning, can support from youth to retirement. So today we invite our expert here, and we have a few questions. But then in the meantime, if you do have any questions, be free to comment, and we can answer the questions live. So before we start, I think some of you have seen Aidan in our episode, but would you just introduce yourself?
Yes, thank you, Hannah. My name's Aidan. I'm from Aidan Dow Wealth Management, and I am a financial advisor. I help people with all aspects of investing and financial planning. But today we're talking specifically about ISAs.
Yeah. Okay. So ISAs, as actually yesterday I was talking to Aidan, what fascinated me is like lots of people think ISA is just a savings account, it's just a cash. Probably some people knows you earn the interest tax free, but yesterday we just discovered it's more than just cash. So Aidan, would you just tell us a little bit more about it, like what type of ISA out there at the moment?
Yeah, it's very interesting because there is a perception that ISAs are mostly for cash or just for cash. But what people don't realise is that they can hold investments within the ISA environment. So ISA basically stands for Individual Savings Account, and by holding investments in the ISA wrapper, you're protecting your investments from tax. So if you're holding just cash in a ISA wrapper, you're only actually protecting your assets from one of the taxes, which is income tax. Whereas if you hold investments in an ISA wrapper, you're protecting from two taxes, the income tax and the capital gains tax. I've got a little drawing here which can help illustrate that. So if I just hold that up here, can we see that? So this is your cash, which is held, or your investments which are held outside of an ISA wrapper, and this is the ISA wrapper, which is basically a protection against these two nasty Bs, and these Bs are income tax and capital gains tax. So by holding in the wrapper, the Bs, the two nasty taxes, can't attack your investments, your money, your cash cannot be attacked, whereas outside the wrapper they can be. So that is principally what an ISA does. But if you hold cash only in an ISA, then you're only protecting yourself from one of the Bs because there's no capital gain on cash. So it really is beneficial for people who are looking to save for the long term and looking to grow their wealth to consider ISAs for holding investments.
Wow, that's very interesting. When we talk about ISA for investment, probably lots of people don't really think about or are not aware of it.
Yes.
So would you just tell us a little bit more about like putting an investment into ISA? A little bit.
Yes, certainly. It's a very straightforward process. Basically, speak to a financial advisor or even your bank, and you use your ISA allowance on an annual basis. So this year you've got £15,240. So you would open an account with a financial advisor or with your bank, and £15,240 can be invested in a tax wrapper, in an ISA. Now next year that allowance is going up to £20,000. So therefore £20,000 of your investments can be protected from these two taxes in the ISA environment.
Yeah, one good note is because it's pretty much like towards the end of the tax year. Every year you have this allowance. So if you haven't maxed out your allowance, it's time to do so. But something make you aware the next year is going to be 20,000. That's right. That's actually quite a bit of jump.
It's a significant jump. And when you think that if you're married, you get £20,000 allowance for yourself, you get £20,000 allowance for your wife as well, or your husband if you're female.
Yeah,
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 yeah.
yeah. So that's actually a very good point. So husband and wife. Of course, today's topic is about family wealth planning. We start from the beginning. So we talk about husband and wife. We can max out the allowances.
Yes.
But also we have the junior ISA.
Yes.
Because some people know about junior ISA, but probably again, people think it's only cash.
That's right.
But
Yeah,
actually, it can be you can hold investment in there as
That-
well. So Aidan.
Yes,
just
very
talk-
simply,
yeah.
the wrapper is exactly the same, except because it's for children, called the junior ISA, people below 16 can have one of them, and it is, the allowance within there is reduced, so each child can have each year an allowance of £4,080 a year. And again, they can be held in cash, or you can speak to your advisor, and that can be held in assets. Things like stock market exposure, bond exposure, property exposure, whatever that asset you want to have in there. So very flexible.
Yeah, that's actually quite interesting. It's just like recently, as we know, like university fees being
Yep.
really expensive,
Very
cost
expensive, yeah.
about, well, the lifetime cost about having a child at least 200,000. Probably I underestimated that. It's a lot.
Yeah.
So
Yeah.
actually giving you like capital return, capital growth,
Yep.
but tax-free, it's actually quite a good option.
Very good
to
option.
consider.
Yeah, if you think you can use £4,800 allowance by the time they're 18, you've got a good pot built up over that period. By investing in the stock market, you would expect some sort of growth in that. So yeah, very, very good.
Yeah. So just out of interest, because we talk about holding the investment into ISA, so is there any sort of figures, like what will be the growth you can see, like at the moment?
Well, that's a good question. I mean, really, whatever investment most investments are ISA eligible. There's some things that are not ISA eligible, but for example, you could hold a fund which basically follows the FTSE 100, and the FTSE 100 has performed very well over the last 5 years. So if you had held a FTSE 100 exposed fund in an ISA over the last 5 years, you would have a fund that's gone up over 30, maybe 35% over that period of time. And again, you're not paying any income tax on the income that throws off, or capital gains when you do come to sell that fund. So yeah, good benefits there.
Yeah, it's actually really good benefits, especially when the things give you capital growth. At the moment, actually, there are some ISAs, like especially the lifetime ISA.
Yes.
It's going to come in April this year. So it's actually the government is going to give you like bonuses. So how do you compare these sort of government-supported like lifetime ISA versus like stocks and shares ISA?
That's a good question. So that the LISA or the LISA, the lifetime ISA, is coming in the next few days and next weeks, or the beginning of April, and that's aimed at people between 18 and 39. And again, it's a similar wrapper. So basically, your investments in there are protected from tax, the two Bs that we've talked about. But the lifetime ISA has got a bit of flexibility, so you can either use that as a vehicle to save for your pension, or you could potentially buy a property with that. The lifetime ISA is a bit different to the other ISAs because of this bonus element, which other ISAs don't have. But this bonus element, where you save £4,000 on an annual basis, you get £1,000 given to you by the government. So again, that's an extra sweetener on that.
Yeah, that's because the bonus element. Some people think it's sort of give you some sort of certainty.
Yep.
Yeah.
And if you started saving into a lifetime ISA at the age of 18, you got to the age of 50, you could have had 32,000, and you've saved £4,000 every year for that period of time. The government would give you £32,000 at that stage. But there's a few caveats in there. So if you wanted to buy a property, the property would have to be valued less than £450,000. And if you wanted to use that for your pension, and you wouldn't be able to access it for a further 10 years. So there are a few caveats in there, but it looks like it's with that bonus element, it really is going to be terrific for people.
Cool. So because we mentioned about pension, like retirement.
Yeah.
So and also pension, lots of people probably know every £80, if you're a basic taxpayer, the government top up £20 in your pot. Also, there's some kind of a bonus element into that. So how do you compare pension versus lifetime ISA?
Pension against lifetime ISA, very similar products actually, very similar, because they've both got a bonus element with getting the tax back. They've both got the wrapper protecting you from the 2 tax Bs, so they are actually quite similar. And I suppose they are both long-term savings plans, either for buying a property or retiring. Mind you, a pension obviously is not for buying a home.
Yeah. So I suppose like a lifetime ISA actually give you some sort of flexibility. Like
There's a bit of flexibility in there, because you have got that option to buy a home, compared to the pension where you don't have that option.
Yeah. Actually, when it comes to buying a property, actually out of interest, there are some people like adults, when they think about getting into investment, they probably think like getting into investing property.
Yes.
So how do you compare like putting your investment, like start investing stocks and shares ISA versus going for the property investment?
That's a good question. So most people's perception of investing in property would be buying a flat or a buy-to-let property like that. So when you do that, you're exposed to the taxes, the 2 Bs of taxes, the income tax on any income that property produces, and capital gains tax when you come to sell that.
Yeah.
So whereas in the ISA you're protecting yourself from that. But the ISA is very flexible, because you can invest in property through an ISA, through property funds. So if you're very keen to hold property, or property is the asset that you like, or you think that's the asset that's going to provide the best for you, then you can access it in a tax efficient way, as opposed to potentially buying it, getting a mortgage and buying it outside of that ISA environment, because you can't actually put a physical property inside an ISA.
Yeah, that's true, because as we see, we help lots of clients with like if they have a buy-to-let property, the tax rule is going to change from April this year. Like the tax relief on the finance cost, that's going to change. So actually having like investing in ISA, like it's a property fund.
A property fund, you could do it within an ISA environment, if that's what you choose. But I would speak to your advisor about how to do that.
Yeah, absolutely. So, well, that's quite useful information. Thanks, Aidan.
Pleasure.
Yeah.
Yeah.
So before, of course, we talk about like from youth to investment and to retirement. Is there any tips or suggestions you want to give to people like who are looking to invest, like looking to have a stock and share ISA or any kind of ISA?
I think the key thing for investing is start early and use your allowances each year. So and so be very regular with your savings. So I encourage my clients to pay into a savings vehicle on a monthly basis. So that's the 2 tips. Start early and save regularly. And use your allowance, and use your husband and wife's allowance to make sure you're maximising as much exposure to the tax efficient environment as possible.
That's cool. And of course, you mentioned make sure you speak to a financial advisor to make sure that you have the good investment.
That's the key.
The ISA.
That is absolutely key, Hannah, because by having the right investments in your ISA wrapper, that can make a huge difference. I think there's a statistic that's showing the difference between a sort of managed fund, which is a sort of generalist fund. The best ones over a 5-year period would be up 30, 40, even 50%. The worst ones could be down as much as 100%. So that's a huge difference between a good performing fund and a bad performing fund. And when you transmit that 1% difference in performance, 1% difference in performance can impact the income you have in retirement by 10%. So it's really crucial the investments you get and hold within the environment is as good as possible.
Yeah, that's true. So that's really crucial, and really crucial that you find an advisor for professional advice for this investment. Okay, so having said that, if anyone would like to pick your brain?
Yes,
Or
yep.
would like to work with you, what would be the best way to get in touch with you?
Well, I mean, I've got a Facebook page, which is Aidan Dow Wealth Management Limited. I've also got a website, aidandowwealthmanagementlimited.com. Yeah, and you can contact me through you as well. I'm delighted to ask any questions. And yeah, what I typically do is first meeting, there's no charge. The charge is on me, so that I can get a feel of some ideas of how I work with people. So yeah, I'd be delighted to help any of your clients or anybody that needs some help.
Yeah, that's cool. And one quick note as well. The other way is we have a Facebook group, Tax Deductible Lifestyle Tribe, and Aidan is also in the group. So be free to ask questions related to investment, and Aidan will be able to help. And later on today, this video will be posted in the group as well as our little picture here and some other resources. So Aidan will be able to help post other resources related to investment or ISA, and be free to ask more questions. So finally, well, of course, you need to request to join that group. It's a closed group, so anything said in the group, stay in the group. Okay. So finally, well, thanks everyone for joining us, and you've been really good. I hope you find this episode useful. Of course, if you do have any further questions regarding your money, investment, and tax, so be free to let us know. It's just that we are here to help you, and we would love to hear from you, like any of your thoughts, any of your money worries, or any feedback of our session, like Facebook Live sessions. We would love to hear from you. Okay, so be free to comment or personal message me. Okay, thank you very much, and I shall see you soon. Okay, bye.
Thank you. Goodbye.